Welcome to Technical Insights, ladies and gentlemen, where we capitalize on the swings in the market. And when I say the swings in the market, ladies and gentlemen, I'm not talking about calling what's going to happen tomorrow for a day trade or next week. I'm talking about calling swings, which could take as long as anywhere from 2 weeks to 2 months. That's just how we trade. And today we are actually going to take a quick look into the biggest winners and biggest losers in the market and see what we can learn from them. Are they something we should have been in? Is there a reason our strategy would have had us in the biggest loser or biggest winner? All right, it's always a good thing when you're trying to learn stock charts to actually dig into the biggest winners, biggest losers, and just jump to the mediums. There's days and weekends where I used to just study every single chart from A to Z with almost every single indicator. Been doing this for 23 years now. So let's take a quick look. One of the first ones I want to pull up, and it is of course, a biotech. It's up 83%. Now, for some reason, it's not showing up on the U.S. common stock list here in TC 2000, but it was trending on Stock Twist today, which I peek in periodically. So if you look at the news, basically today they bought a license for an exclusive global license to develop and commercialize Tolomidone, a phase 2 ready asset for type 1 diabetes. So this is a phase 2 asset, meaning they still have to complete phase 3 and get this thing through FDA approval. Okay. And this thing is up 100. And you got so many other companies like Lilly and some of the, major pharmaceutical companies and biotech that own diabetes treatments, whether or not this is a strong enough product that they thought it was a good investment to buy it. That as an asset, that is a really good question. And keep in mind right here, I don't know what their financials are, but it says they are making an upfront payment of an undisclosed amount of cash to adhere, basically, secure note holders. Now, this company, I really do not think they're making any money, and that could cause them to raise more funds and try to stay afloat. They still got to get this thing FDA approved, then market it and sell it and try to make a profit. Maybe they're hoping somebody comes and buys them out. I don't know, but let's just zoom out. Ladies and gentlemen, watch me zoom out on this chart. It's $5 now, and it went as high as $9 today. So whoever's been buying at $9 through here, it's been dropping back down to 5. Really sorry about your loss, but hey, hopefully you get your money back. There's nothing I would be touching. And let's zoom, let's pan out and watch. Look at this stock chart, ladies and gentlemen. Look at this right here. 58% drop. That's a hard, that'll wipe out about 60% of your position. That's a hard thing to come back from. Right here, 16%. I mean, this thing has just been tanking and tanking and tanking. What is that? 20%. Tanking and tanking and tanking and tanking and tanking. I mean, what in the world? I'm surprised this company is not bankrupt. I don't know much about it. Like I said, I stopped trading single biotechs a long time ago. Started off trading them when I first entered the market at 18 years old. Um, followed people, followed FDA calendars for FDA approvals coming up, get in about 6 months beforehand. Ladies and gentlemen, I had some big runs, but also some big losses. And the risk versus reward just don't add up to me. I want to take like 0 losses and just compound profit over time. So there is no reason for us to be in this biotech company here, BDRX. If you were in it and you made that swing, let's say you entered yesterday for some reason, somebody told you about this, hopefully you locked in when you were up about 200%. If not, hey, I just hope you entered with a plan to make money. That's all I can say. And we're going to first start off in the high cap 1000 after we look at this, and we'll jump back over in these because there's really not much in the U.S. common stocks I want to talk about. But Affirm, ladies and gentlemen, Affirm rallied today based on the fact that people think they will use their buy here, pay here system for Cyber Monday. And that just goes to show you that that is really not a good thing. Like people are going in debt for Cyber Monday. People are going in debt for Christmas shopping. Right here, firm shares jumped amid heavy trading as shoppers were expected to take advantage of its buy now, pay later feature on Cyber Monday. Look, if you can't pay now, don't buy now. That's just my personal opinion. I don't do debt. I don't like borrowing money or owing a man anything. Yeah, you can get into the whole, well, if I take the debt out at this rate and invest it at this rate, whatever. Do whatever you do to make money. I'm gonna do what I do to make money, and that is make my money, print money. Anyway, a firm, and we would have been in it down here in the oversold area, right? There's really nothing I like. I mean, right here would have been really a good swing trade. So if you look at this and learn, it swung over the 200 day. It's the second swing over the 200 day. Came up on the oversold list. You would have had an opportunity to buy that and be in for that 75% rally in 1 month. That would have been one heck of a rally. Here it hit. So it hit oversold right here. What you would expect at the, well, don't ever expect. That's why I always teach and say, hey, maybe you locked in when you were up 10%. That's why I always teach and say, have cash ready in your positions to get your cost average lower. So this thing, you were down as much as 15%. You would have averaged in a few more times. Okay, so then you bounce back up, and then it came back down again, right? You still haven't hit the overbought area, right? Overbought is right here. So if we entered here, been down as much as 15%, we would have been all in on this. So if we would enter with 20%, we would have entered 4 more times. I mean, we could have had our average roughly right around this area. I'm not going to break out a calculator and do the math for you. And then most likely we would have exited in a month with about 30% gain. I'm sorry, not a month, a month. Let's see here. About a month and a half with about a 30%. I'm sorry. Let's do something else. Take our average here. We would have entered here. So it would have been about a month and a half with about a 20% gain. Somewhere right around there. You get what I'm saying. Now, if you would have, let's say a firm is something you wanted to hold for the long term, you would have been adding on the pullbacks, and you'd still be in this rally right here, and you'd add on the next pullback. That's how we do our long-term investments. Now, I don't like companies that make money by you being in debt. It's almost like a freaking online loan cash checking place. I don't like those things. Let's see here, Roku. Now it rallied today. Nothing we would have been in. I mean, if you look at the stock chart, we would have left it when it crossed under the 200 day down here, which would have saved you 83% in 2 years, 83% loss, and definitely been a good exit. And you'd still be down 70% right now if you held that long. We would have started working it when it crossed over the 200 day and then got out when it crossed under. As you can see here, though, it did cross back over the 200 day. Would have been your first possible swing. Could have waited for another one possibly. Right there was close to being oversold. Keep all of our scans right around 30 on the stochastics, even though we're looking at 25, but that would have been your second swing, 40% in 7 days. That's one heck of a swing. Your third swing, 15% in 13 days. And then here it hit here, which something is up with that bar right there. So that's telling me I didn't create a new high. It rallied up and it closed up, but it closed lower than it opened. Okay. Kind of bearish to me, and hopefully you would have got that signal to lock that in and be cautious on this next downtrend. Let's say you did enter here, ladies and gentlemen, you would have been really lowering your cost average. It was down about 8%. Not a huge thing to jump in, right? Bought maybe average 2 more times. And then you got close to overbought here, ladies and gentlemen. I would have locked in profit right there. You should have had a little bit of profit to play with, but it hit overbought right there, close enough to it. I would have locked in, especially with that candle. And you can see as it crashed on the 200-day there. And here it has rallied back up, which is great, but that's how we would have traded that. Once it crossed under the 200-day, we wouldn't have messed with it, and I'm not sweating it. Yeah, big swing. And here, you could have still traded that, right? You would have averaged down. You'd probably be all in. You would have had about 5 entry points because we go about 20% on single stocks. So let's say your average was here. You could still be up about 70% in a month and a half. What we like to see, but we see more bloodbaths, as you can see. Last time it crossed under the 200-day, right? Then we see winners when it does that. Wayfair, this is nothing we'd be in as it was under the 200-day. Nothing I see I really like about this stock chart. It crossed over the 200-day, ran, pulled back. Might have been a buy right in that area for about 13% in 15 days. Nothing to be too excited about. And there was probably better opportunities at that time. But look at this one across under the 200-day, ladies and gentlemen. Man, what a chart! Another 80% over 2 years. If it's under the 200-day moving average, ladies and gentlemen, just there's no point to be in it as far as I'm concerned. I don't want to sit there and watch my portfolio or my single stock or anything for that matter lose 80%, even if it's over 2 years. That's I mean, that'll take you from 10 down to 2 or from 100 down to 20. That's horrible. Shopify, same thing. Almost look just like almost look just like Roku's. It's crossed under the 200-day and then bounced back up. And that happens sometimes, ladies and gentlemen. So you could have bought when it was oversold here. But anytime it's close to that 200-day when it's oversold, we tell you to be very, very cautious and be prepared to lock in any losses if it dips under. And it did. And you know, might upset you to see it rally up here, but stick to a strategy that works for you and don't look back. Because the majority of the time when they cross under the 200-day, you end up like that. All right, that's 73% a year. I'm telling you, I got so many examples of that in my book. I can name so many examples, and you can go through this every stock chart on TC2000 and look. Tell me how many times you would have had a winner versus a loser. Look at some of the biggest losers. So this is Chewy. I believe this is just a dog food company. Crazy thing is, I know somebody who bought this stock way back when because you know they were buying dog food from here and other dog stuff, and you know they thought it was going to be a big company, huge market. And I just looked at the stock chart real quick on my phone, and I said, "Dude, it's under the 200-day moving average. Stay away." But they've been loading up on this entire downtrend. Unfortunately, let's see if there was any news out. Some Morgan Stanley upgrades Chewy to overweight. That was on 10/31 from equal weight. From price target 28 from 31. Man. Yo, Morgan Stanley, if you need some better people to call price targets and recommend people what to buy, just let me know because that would have been horrible. That was at the end of October. Don't get me wrong, they had a little movement there. October, right? They had a little run maybe on the Morgan Stanley action. Ladies and gentlemen, if it's under the 200-day moving average, I wouldn't touch it with a 10-foot pole. How I feel about that one. Here's a medical device company. We don't mess with those. And it is under the 200-day, biggest loser. Heading to the oversold area. Here's another biggest loser. Crossed under the 200-day, we would not be in it. If you're in it, let me know. Let's jump over here real quick to U.S. common stocks, and we'll get out of here for the day. So one of your biggest winners here, technology company. It opened up as IPO at 288 and it's down to 66 cents. So that's one that if you would have bought at the high when it opened on that candle when it opened was 288 and it rallied pretty high, but it's nothing to be excited about, ladies and gentlemen. It's just developing this 200-day moving average right there, and it's under it. Hopefully you didn't buy that at $1 unless you get your money back. I got a really good plan. Nothing I'm touching. Captivision, hey, here's an IPO that might have worked out for you. It's very rare. It does happen. And when it happens, you'll know about it because everybody be talking about it, which makes you want to jump in all these other IPOs where you lose your tail. Anyway, so it's open at 143. It's up 200%. Got as high as 250 in 11 days. So hey, do some digging here. Maybe it's a company that'll go up to 10. I don't know. Don't know anything about it. I do know it doesn't have a 200-day moving average. So it's not really telling me how investors feel about it. Trust me, doing this for 23 years, you know how many times I've seen this? And then it ends up down under $1. But yeah, until I see a good trend, what investors think of it, which when you're reading a chart is basically like investor psychology 101. That's what I look for there. Let's look at, this is an 8-cent stock. It's probably going to look stupid. Yeah. There's one of your biggest winners again. It's been really a loser if you've been holding this thing. Been making money on the pops here and there. Congratulations. Nothing I would have in my portfolio for long-term investment or trading, especially it being under its 200-day moving average. Anyway, if you got in that for some reason yesterday, let me know. What set you off? What's got you buying it? All right, let's look at this one. This is down. It's a 2-cent stock, 3-cent stock. Let's go to something worth more than $1. And that looks ugly. So, man, what a loser that was. Anyway, just to kind of show you these pump and dumps. So this thing's been pumped up on 11.15. All right, it rallied up to $1, 362%. Hopefully people lock that in. Got as high as 400%. Hopefully people took profit. For those buying in this range, all right, so that was a big winner there, 143%, 8%, and now down 30%. And people will probably continue locking in profit, and you'll probably see that fade like it did over here and like it did right here. Be careful with biotech, ladies and gentlemen. Easy to get pumped into them thinking they're going to cure some disease or something like that, when in all reality, it's probably just a pump and dump. They're probably trying to keep their business afloat, here, this stock right here. Oh my goodness, I remember this. This was one of the first stocks look at the yearly. One of the first stocks I started trading. Yeah, I started trading back here. I remember this company from a long time ago. Look at it. Freaking absolutely nothing. Such a loser. Wonder what they're doing nowadays. Let me look. Look at that. Closes 5 million common stock offering. Still trying to raise money, ladies and gentlemen. Still ain't brought nothing to the market. Still ain't making money. Why would you put your money in that? Yeah, same crap. That's for 2 years ago. Yeah. Been doing the same thing since 1985, and people still dumping money into it. It's a freaking scheme to get people with their money, so everybody who works there can get paid and accomplish nothing. Hopefully they do accomplish something someday, but you know what? For now, I'm going to stick to time restricted eating for my gut health, just trying to be healthy overall, because I got a little faith in any of these companies that want you as a repeat customer buying their medicine to cure something. Either that or a repeat customer to dump your money into their stocks. Their employees can continue to buy and sell shares, and don't need to get up to date on what's going on out there. Some of these companies, some of this crap should be illegal. Anyway, if you ain't subscribed yet, hit subscribe. Leave me some feedback. Tell me what you'd like to see. Right now, the overall market, ladies and gentlemen, we shot that video this weekend, and as you can see, it's been overbought since here. Yeah, it rallied up. Sweet. My long-term accounts, all 4 of them are benefiting from it, but our trading account is sitting in cash, waiting for a swing back down. Ladies and gentlemen, like I said, I'm not trying to call what's going to happen tomorrow. I'm not trying to call what's going to happen next week, but I'm calling swings that I'm waiting for to make money. As you can see, There's always swings, ladies and gentlemen. You don't have to overcomplicate the market. Get you a strategy that works, stick with it, make sure it's simple, and make sure it's making you money, and then just compound the profits over and over and over again. All right, that's it. You guys have a good night. We'll be back soon.